Again, regulatory certainty for any business, as you know, as an advocate for small business is important. And for small businesses who don't have legions of consultants, legions of lawyers, the regulatory certainty that is important, and the ability to grow through acquisition is also important. And we just want the regulators to put down the framework and stick to the framework, not to regulate through supervision.
Thank you for that answer. And finally, in the 2025 FSOC annual report, you noted that financial stability and economic growth are closely linked. You also observed that many financial and regulatory supervisory policies fail to consider their cumulative impact on economic growth, with new regulatory costs often evaluated in isolation. I hear this concern frequently from small businesses and financial institutions in my district in Texas, where layer after layer of regulatory burden from prior administrations led to millions of dollars and countless hours spent on compliance instead of serving customers and supporting their local communities, and they're hiring compliance officers before they hire loan officers. Again, it affects Main Street. So how do layers of regulations after small business growth with ultimately affect economic growth?
Again, it is a great retardant for economic growth. And I believe that if we were to go back and look at what's happened, Karen Pettigrew, a progressive, believes that this regulation of small banks has been a real problem. And she calls the Fed the engine of inequality, and a lot of the regulation, the burdensome regulation, and has come out of the Federal Reserve, but also the FDIC and the OCC. And I think removing that can, again, get Main Street lending going again.
Thank you. I've got 34 seconds left. Would you like to have any of that?
I would like to add that under this administration, we are pushing for the financial system, the regulated financial system, to get back on an even, safe, sound, and smart level through deregulation, but not deregulation at any cost, but deregulation that will help the American small business, the American consumer, and those who would like to become homeowners.
Thank you for watching Main Street. I yield my time back.
Gentleman yields back. Chair recognizes the ranking member of our Financial Institutions Subcommittee, Dr. Foster from Chicago. You're recognized 4 or 5 minutes.
Thank you, Mr. Chair, and to our witness. I mentioned in my opening remarks our recent letter to FSOC asking them to look seriously at the risks of the deflation of the AI circular investment bubble, which is something you obviously read about every time you open up any financial journal anywhere these days. I understand there was a similar letter sent recently by the Senate Democrats that received a similarly dismissive response, basically recognizing that, yeah, this is part of what we're supposed to be doing, but provided zero specifics on what you're actually doing. So how many people do you have that are actually assigned to looking at the risk of this circular financing, these off-balance sheet entities, the securitization, all of the parade of terribles that wrecked our economy last time and are looking to threaten it again? So how many people are actually working on this, and when can we expect to hear from what they've concluded?
Again, we are constantly evaluating.
How many people? How many people? Could you answer my question? How many people are actually working on that problem?
That it is in all agencies. It is in all agencies.
No answer. Okay, I understand. You're not willing to give me a number on who's actually working on it. And when
I could say 2,000, but that wouldn't be correct.
It wouldn't be.
Because some people may devote an hour a day, some people may devote 80 hours a week.
Right. When can we hear something specific? When can we expect to hear something specific?
In the interest of getting back to you and a change in tone, I am happy to send you a reply.
Okay, I would appreciate something with a lot more detail than something we got from the under assistant acting, whatever it was. All right. Also, well, last time we spoke, I asked you a simple question that I didn't get an answer to, which is, does this administration support a strong dollar policy or a weak dollar policy? And frankly, as far as I've been able to tell, you're just all over the map on this. So could you answer the question just simply, do you support a strong dollar policy or a weak dollar policy? And how would you, score your, whichever way you're trying to go, how are you doing?
We always support a strong dollar policy.
Okay, that's interesting because, as Well, last time we spoke, I presented a couple of graphs which presented the historic fact that, interesting fact that every time you put a Republican in charge of in the presidency, that two things have happened: that the dollar has gotten weaker, and that manufacturing employment has dropped. And this has happened just during every Republican president in our lifetime, and the reverse has happened every Democratic president. The dollar has strengthened, actually achieved your objective instead of just talking about it. And since the time of that, actually, I think this plot here was the one we had then when the dollar was only 8%. I think it's down about 10.5% now, so you're continuing down the traditional path.
I'm sorry, which index are you using for the
DXY.
dollar?
I think it's DXY year on year.
Yeah,
And I think it's, the last time I looked at it, it was roughly down 10.5%.
and you have the president on there, but under President Clinton, it would be.
I'm not talking
it would
about-
be. It would be
yes.
my belief that it was Speaker Gingrich and what he did.
I was just talking about the president who has
Clinton
control.
working with the Clinton administration
I
together.
understand.
Is Dr. Foster's time.
Yeah. But you agree it is a historic fact that during those presidencies, manufacturing employment dropped and the dollar got weaker during Republicans without exception.
I haven't seen the data, so I can't.
I
agree with you.
presented it to you on a graph. It's my understanding, actually, that later on in that hearing, after I'd left to attend a different hearing, that you said some rather negative things about the data, and that as a finance professor, that you would have, I think, given it an F, was, I believe, your word. And so that, all right, so now I'm not a finance professor, I'm a manufacturer, okay? But I understand that the first rule of a manufacturer is you don't piss off your customers, which seems to be something that your administration just revels in doing, internationally especially. And so I think that it's easy for me to understand why manufacturing employment has continued to drop. That ever since Liberation Day, we have seen a continuous decline in manufacturing employment, which was one of your number one promises.
Congressman, as a manufacturer, you would know that I can't snap my fingers and create factories. So there is a building process that is well underway. I could send you the chart on the
Yes,
factory groundbreaking.
I understand, and the fact that we have been historically a low tariff nation is, I believe, responsible for the really extraordinary economic growth over the last decade of the United States compared to, say, the EU, which was a high tariff regime. And now we are joining EU
I believe that
in
we've
going down that
exported
road.
jobs to China, so
No,
you were touching on a lot of CCP talking points.
I think as a manufacturer who's kept jobs in the Midwest, I think I have a little more credibility in finance.
Gentleman's time has expired. Does the gentleman want something inserted in the record? Would you like that document inserted in the record? Without objection, be included in the record.
Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.